Hey everybody, it's Tuesday, March 16th, 2021. However, you're probably watching this, more likely anyways, on Wednesday, March 17th, because it's another late night output here. Now this goes against the recommended publishing hours for us YouTubers, us creators, to get the most views. According to my analytics tool that I use, my peak hours to upload are between 4 to 6 p.m. When most of my audience is connected and ready to watch. However, life gets in the way and sometimes you just have to put out videos when you can. And if I would have waited to put this out, then tomorrow would have been another busy day. I might not put it out tomorrow. So here we are, close to 10 p.m. Pacific time putting this out. But thank you for being here. Let's get right into it. Warren Buffett has some investment advice for you and for me, or those of you who get a stimulus check. What's Warren Buffett saying? Well, the man who's worth $100 billion. Now, before we get started on this, I'm not a fan of Warren Buffett's investment so-called strategy. There's certain digital assets that went up by 10,000+% over the past 5 or 10 years that he wasn't so fond of. So whatever he says, take with a grain of salt. Whenever you get investment advice from a too-big-to-fail silver spoon man, always try to read between the lines. Here's what he says, and this is out of MoneyWise via yahoo.com finance. Any extra money that lands in your lap, your first move should be to pay off credit card debt. And he says, quote, "The world is in love with credit cards, but they're too costly," unquote. He also goes on to say that many Americans, quote, "use their card as a piggy bank to be rated. And if I owed money at 18%, the first thing I would do with any money I had would be to pay it off," unquote. Okay, so in this case, I agree with him. I mean, the average interest rate on credit cards is about 18%. And if you have a late payment, it can skyrocket all the way up towards 30%. But if you guys remember, in our previous video, we talked about how stimulus checks, a big chunk of those is going to go towards buying digital assets and stocks. So the bubbles that we're seeing in these select assets, including stocks, are likely going to get bigger unless the Fed really drops the ball in the debt markets. And out of that video, if you don't remember, if you didn't watch it, we talked about how it was estimated based on a survey that about $40 billion with a B, $40 billion of these stimulus checks were going to go towards investing in digital assets. And I'm actually wondering how many people are taking out cash advances on their credit cards just to jump into these markets, right? Because right now, when you see things almost go straight up, it seems like it gives you that feeling of FOMO, right? A lot of people just want to get into the markets. Now, that's not how I invest. I wait for pullbacks, and I've talked about that a lot of times. But there are a lot of people that are jumping into these markets right now because they don't want to miss out. A lot of people are seeing parabolic moves, and a lot of people are even thinking that hyperinflation is beginning to kick in right now. Stock market new all-time highs, and so many cryptos just skyrocketing. All right, also, I want to touch on this a little bit more. We talked about this in a previous episode. Stimulus checks are not protected from debt collectors. And according to this article, it may be too late to protect some people's payments since the Treasury Department said it started depositing money over the previous weekend. When the payments are protected, the IRS deposits the money with a unique identifier that tells the banks not to comply with court orders to let a debt collector have the money. While depository institutions and even many debt collectors and buyers believe that economic impact payments should be exempt from garnishment orders, depository institutions are obligated to comply with court orders. Now, there are some lawmakers out there that are looking to add some protection to these stimulus payouts, but we'll have to see how that goes. So the banks may have to do what they have to do legally, and I know a lot of people that are going to get their stimulus funds right away out of their accounts, out of their checking accounts, to try to prevent any collection activities from happening. All right, let's switch it up a little bit here. Let's transition over here, and we're going to again blow holes in the theory that there's a economic recovery, right? Let's take a look at another chart here, and here we are now a year after the shutdown recession began. and we see this labor force participation rate. We see the huge drop. It was going up a little bit, by the way, until the beginning of 2020 when the thing happened, and we see the huge drop. And here we are a year later. Doesn't look like a recovery to me. Now, some of you say, hey, JJ, a lot of these people, they're out of the labor force because they're retired, or they're all so rich they don't need to work. Well, not so fast. Let's take a look at another chart that focuses just on working age individuals, and this is the labor force participation rate for people of age 25 to 54. So, and similar pattern, right? You see a huge drop and not so much of a recovery, right? A recovery would look something like this. It would go along the top of the trend line there, and we're certainly not seeing that at all. And let's see, in a couple days we're going to find out this latest week's new jobless filings, and I expect it to be another bloodbath. Expect anywhere from 700 to 800,000 as my guess. And unless they change the formula in how they calculate jobless filings, I really doubt you're going to start seeing that number get to pre-shutdown levels anytime soon. And let's talk about something else that's really not recovering, and it's pretty sad. And these are late rents, and this is a recent report here out of Time. Millions of tenants behind on rent, small landlords struggling, eviction moratoriums expiring soon. Now, will they let those expire? I seriously doubt it, but if they did, it would be an absolute nightmare scenario with so many people that are behind on their rent right now. And some more pretty sad numbers out of this article. More than 1/3 of U.S. adults are still struggling to pay basic household expenses. And according to a Census Bureau survey in January, 11% of the population reported that their households didn't get enough to eat the prior week. And nearly 12 million renters are expected to owe an average of almost $6,000 in late rent each. And I just have to say it again, folks, this is just really, really sad what's happening to our country, and it's looking like it's going to be a permanent handout population. And not everybody, but a bigger and bigger portion of the population is having to rely on forgiveness, laws to prevent them from being kicked into the street and losing the roof over their heads, handouts, payouts, moratoriums, and the such. And it's probably going to get a lot worse. I don't really see any real solutions being discussed. That's one of the topics of this channel, is that no one that has the power to do anything is really doing anything meaningful. Of course, they're going to hand out a few $1,000s with the stimulus checks, even part of a $2 trillion stimulus package and economic rescue plan. We know that only a very small portion of that goes to the people that actually need it the most. All right, so hold on tight. Things are likely going to get a lot worse. Just wait until we see the markets turn. When the markets turn, look out below, because that's the only bright spot that people are pointing to in the economy. Hey, look at the stock market. Look at this, look at that, that's going up. In the meantime, tens of millions of people are barely hanging on and are just about to be homeless if it weren't for the protections right now. Pretty scary times, folks. Thanks for being here, for watching this. Stay well, stay safe, stay prepared. I'd like to hear from you down in the comments. Love seeing all your comments. Thank you for interacting with me here. Talk to you very soon. Bye for now, everybody. Peace.